The guardrails held, whales bought the dip, and we got a nice pump after that coming off of yesterday's dismal economic report. And now we see support being retested and potentially an attempt to retrace some of this move, if not all of it. Hey guys, it's Keith Allen, and yesterday, of course, we had a dismal economic report pointing to the fact that rates are going to stay higher for longer. On the candle chart, of course, we had back-to-back trend precognition signals coming in here. This was a tentative signal. It actually invalidated by the end of the day after we got this pump, but really the move played out as expected. And seeing price wick through all of these levels, it wicked through the trend line. It wicked through support at that 69K level, which has been very critical and very difficult for us to validate an RS flip on. Hasn't happened yet. And it also wicked through handily the 21-day moving average. This, to me, is weakness on this side, right? Now, of course, we obviously, after that dip, we broke up nicely, cleared all of those prior resistance levels, and even cleared the trend line here. That's all positive. Also, what's positive is the fact that this is a higher low, another higher low. We talked yesterday about this series of higher lows, 59K being the absolute critical one. If we lose this level, then we got to go talk about potentially retesting those prior consolidation areas down in the 50K range. But at the moment, there's no sentiment for that. Okay, we can't take this out of our sights. It never got retested. We can't forget about that. And at the moment, there's no sentiment for it. But if we were to lose these levels, then that's where my focus turns to at that point. So, what a lot looks good, right? We have the halving coming up here very, very soon. So, all eyes long term would be I think most people believe that within months after the halving that we should be seeing price move up, and that should probably continue for several months, maybe even a year or more. We'll have to see how this cycle, it seems a little bit accelerated. So, we'll take it, one step at a time. But the positive side of this is the higher lows and the higher lows and now the higher lows. We did yesterday, or this week, I should say, see a higher high from the, from this area, from the trend line. So we do have a potential breakout happening here from the structure, but it's yet to validate because we're flirting with this line still, right? So certainly have to be mindful of that. In terms of the economic reports, yesterday we had a hot inflation number. Nobody really wanted to see that. And today, we have more inflation data coming out, and this, of course, adds to the narrative. But I don't know how impactful it's going to be at this point, right? The market already knows we're higher for longer, and that's getting baked in, right? Whether we end up with 2 rate cuts or 1 rate cut or no rate cuts, the economy is strong and the markets are still thriving. So in terms of how you trade this, this data comes out every week, and it does create some volatility, and it does create some opportunity for traders. But if you're a long-term investor, then then you're looking at things like the halving and the fact that historically we see price move up after the halving. So keep that in mind, right? If trying to trade this is stressful to you, then don't sweat it, right? Know that we can have corrections. We can have deep corrections even, 20, 30, 40% corrections in bull markets, even just around halvings. There's a history of that. Doesn't mean it has to happen, but does mean that you should be prepared for it, and you shouldn't be freaked out if and when it does. Okay, so maybe we're not going to see price go lower than 65, or maybe at this point 67 becomes the new the new local bottom, right? We're testing here nicely. We have beautiful confluence down here between the 50-day moving average and the trend line. So if we continue to break down from here, a retest of this level at this is almost 66K right now, and this keeps moving up, right? So what's going to happen here? We're going to consolidate above this trend line, or are we going to fall back into the trend line? This is really, the consolidation part doesn't bother me. In fact, I like the fact that we are consolidating. I think that's healthy. I think we build more, stronger moves by having some consolidation. But this range is so wide, it's hard to even, in my opinion, describe this as a consolidation range. It's trying to find the consolidation range, in my opinion, right? So we have some time, a little bit of time spent above the 69K level. We have more time than that spent below the 69K level. And, are we going to start spending some time above this trend line? Being tested at the moment. So that's, and holding for the moment. So that's a positive. We just need to see more of that. In terms of liquidity in the order book, you can see it's breaking down right here, right? So let's zoom in and see what this looks like here on the grand scheme of things, okay? So look at the move yesterday. We got this dip down here, and whales bought. And they bought pretty consistently. Whales and mega whales bought. Then these red sharks came back in, and at different points, this yellow class, which, yes, this is retail lives in these lower classes, obviously, in these smaller order classes. But let's be clear. Whales can disguise themselves in any order class. When we see high volume happening in these lower classes, it's likely institutional entities utilizing these classes as well. So, it looks like yellow got back on the TWAP train yesterday, and they're buying now. That pattern is pretty simple. They buy when price is dropping, and they sell when price is going up. That's a pretty that's a pretty standard strategy, and a pretty solid one, actually. But you can see now that the whales have started selling off the top here, and this is just normal trade activity. Okay, so is what it is. Whether we hold above this, to me, the critical levels in the chart remain the 69K. I want to see consolidation above this level, full candle bodies, no wicks below the 69K level, until we can validate an RS flip. As long as we keep seeing wicks, that RS flip isn't validated here. It's not validated here. So that's really, in my opinion, the most important level in the chart. Doesn't matter if we close red, we close green. I want to see full candle bodies with no wicks above this 2021 top at 69K. And then we can, have concern about this level here above this trend line. Sure, it would be good to stay above this trend line, but let's face it, you could fall back in. You could stay above the trend line and still fall back below the 69K level. So this is really the critical one for me. A quick look at ETF flows. Wrong chart there. A quick look at ETF flows. Yesterday, we were net positive largely because Grayscale had its lowest day of outflows ever since this all began. And we did see Fidelity stepping back up a bit, and Bitwise coming back in, ARK Invest coming back in. So I've talked about this this asset class of ETFs kind of maturing, right? So they're watching and waiting, and not just aping in like they were in the very beginning when there was 10 years of pent-up demand. They're now really more tuned into the market. And I think that, BlackRock especially seems keen to keep buying as they have a long-term view of things. And, same for Fidelity for that matter, but they've had a couple days where they were really, low. But this looks like they bought the dip yesterday. And, the fact that these are sidelined, they're obviously much smaller entities, much smaller funds. And so they are pacing themselves into this and potentially waiting for bigger dip opportunities to buy. So this becomes kind of normalizing to the market, I think. At least that's my opinion. You're certainly entitled to yours. In fact, on that note, nothing I say or share on these streams should be considered trading advice of any way, shape, or form. Trading is risky. Do your own research. Never risk more than you can afford to lose. Man, risk management is the name of the game, my friends. So really, if you haven't mastered that, you need to, so you can stay in this game for the long haul. Let's zoom out just a bit here, right? Because this all of this stuff around economic data, it gets a little gnarly to trade sometimes, right? And if you don't have the stomach for that, what you can look at is what's happening here in the order book. And in my opinion, liquidity equals sentiment. And the fact that so much liquidity has left this lower range and come up tells me that sentiment has moved higher on the buy side, and likewise on the resistance side, we see resistance continuing to exert downward pressure, likely to try and get these lower levels filled. So know that we have a potential range of volatility here with about that 67K level kind of serving as the strongest area of support. Secondary support down to the 65K level, and to the upside, it's really strong. We have over 200 million in resistance, stacked up to this level here. There's 46 million there. There's another 12. There's another, almost 30. There's a lot going on up here, right? In terms of heavy downward pressure, exerting downward pressure on price. So until we see this side get brighter than this side, I think we're going to continue to range here. But what I'm watching is what whales are doing. As long as whales are continuing to buy, I'm confident. I have confidence that they have their eye on the halving, and we see this series of higher lows, and that's a positive thing. We need to start seeing higher highs, and that's not going to happen until we can clear this liquidity up this way, right? So strongest resistance, obviously, up at 75K. That is largely psychological at this point, but zooming out even further gives you even greater perspective of the fact that all of the the heaviest liquidity is concentrated at the top of the chart, and that means we've got to work a little bit harder. We basically just need to see a big block of bid liquidity come in to say, all right, let's push this thing up. We've seen it happen time and time again historically, so we're looking for something like this to move into the range. 100 million in one spot definitely helps. Seeing it ladder down is good. We certainly want to see that depth, but having a higher concentration closer to price is what really moves price in one direction or the other. You can even see it here. This isn't huge. This is only 67 million, but it was enough to push price down. In conjunction with what was around it. Some of this came down to here, and that's why we saw price come down. So as we see these blocks move up and up and up, that's going to help push price upward. But really what's missing here is a large block of bid liquidity close to price range. That's going to do it for the day, guys. Hope obviously we'll be staying in tune to what's going on. We have this economic data coming out in a few minutes, so we'll be in tune to that. But the long and short of things are we have a halving coming up very soon. Keep that in mind before you get too heavy with button pushing. You don't want to overtrade this stuff here, right? So at the moment, we are holding above this trend line. I'll give you one last look at the intraday so you can see how things are shaping up. Obviously, volatility can happen in this range, and this liquidity outside of that range dampens the volatility. So hope you have a fantastic day, and as always, trade safe, my friends.